Assalamu alaikum and good evening, everybody. So just before we start, can you just check if everybody can see the screen and also hear my voice? All right. I think because some of you I see in the list has been in the previous webinar, so I think we can pretty much go straight to those that are quite important for tonight's topics. So let me just check. So I think we can pretty much record this session. So on the list here, what I see is pretty much most of the guys from last week as well. So can you just post a message on the chat box if this is the first time, and if you don't have anybody who are pretty much fresh and this is the first time you join a webinar on Forex. So I just want to see if there's any beginners or just the ones who was just to start their Forex careers. So just give us a shout out on the chat box so I know who are my participants. All right. Okay. So I have quite a few first timers. So basically, before I start the support and resistance class, I think it's pretty much we better off start with the topic for tonight. We can go with the Forex introduction, and I can also go through how do you start your Forex business. What are the things that you need to do? So let me just open hang on. Okay, I'll just share this. Okay, in your screen you can see I open up www.babypips.com. So basically, for those who have yet to start your trading career, this is the best place for you to start with. When it comes to trading, the most important thing is not about your capital. It's not about the money you put inside the Forex business. Is the education and the knowledge is your true capital in Forex trading. So for beginners, I highly suggest that you spend a little bit of your time to learn all of the basic stuff in Forex, because the more you learn, you can pretty much grasp some of the education that is available here, and it's also free. So it's really important to take in all those free stuff, and once you think that you're happy enough to go forward with the business that you just started with, then you can go through other facilitators or other lecturers that teach Forex. Okay, so first things first, you go to babypips.com and you go to Education tab. You just press How to Trade. May ada tu. All right, and you go to education, how to trade, and there's a lot of topics over here. So you actually start from preschool up to graduation. So there's a lot of things to actually read on. However, what I want you to read on is just a few things before you start your trading career. So basically, you go through course 1, where it tells exactly what is Forex, how do you trade Forex, when can you trade Forex, who trades Forex and stuff like that. And then you go to kindergarten, it tells you about the brokers, it tells you about the different types of analysis, the different types of chart. We're pretty much going to go through some of this later on. And course 3 tells about some of the techniques that people use to do their trading. So for those who have joined me on the previous webinar last week, we pretty much cover the Fibonacci part of that. And today's webinar is a follow-up of that, and we'll be going to talk about support and resistance. Okay, so for me, I highly suggest for those who just started to go through the preschool up to elementary, and after that, if you have more time, then you can pretty much read on other stuff over here. However, I highly suggest that you stop at elementary, you finish everything at elementary, then you go through some of the things that other people teach, because over here you already have 2 different techniques that you can pretty much use for you to start your trading. Okay, so that's the introduction of Forex. So for those who just started Forex, to be honest, personally, the Forex business is one of the largest in terms of volume. On a daily basis, there's about $6 trillion US dollars going in and out of the Forex market. So it's a lot bigger than other businesses, such as maybe stocks and stuff like that. So all of those things, before it happens, Forex exchange has to happen first. So that's why there's a huge volume of money involved in Forex. Okay, so for us, the small guys, we don't need that. I mean, the big amount of money coming in. And as long as we can take a little bit of money for us, maybe about, let's say $1 or $2 a day. That's big enough for anybody to trade in this Forex. But once you go more knowledgeable and you gain more experience, then you can pretty much do this full time. So for those who have just started, I highly suggest that you invest your time on knowledge in terms of your investing your money in Forex. Okay, so the best way is read a lot of stuff, get some more information, come up with, learn a lot of techniques, and find out which techniques that suits your character, and it's much easier for you to understand. So there's a lot of things, but in the webinars to come, our group will be providing free education such as tonight, so you can pretty much use this to do your trading. All right, so before you start your trading, as I said, you do some research, you learn some of the techniques, and once you're ready, then pretty much the person who invited you to this webinar, just ask them for guidance in terms of how to make the accounts, how to deposit your capital in the account. So I highly suggest for those guys who just started that you shouldn't start with a huge amount of money. I mean, for me, $150 or $100 USD is pretty much the optimum amount that you should start your Forex business. So when I talk about starting this business, it's really important that you understand what you're going into. Forex is really important that, let me just write this down. Let me get, okay, let me just go through here. All right. So it's really important. Just bear with my handwriting, okay? All right. Okay. It's like my son's 6 years old handwriting. Okay. This is really important for you guys who are just starting. Okay. This is what I would always tell myself every single day. Okay, Forex is not a hobby. Alright? It is not something you do on your free time. It's not something you do for fun. Okay, when I talk about Forex as a business, it's really important that you take this matter seriously. Regardless your money is just $10 or $100 or maybe even bigger than that, regardless of the amount of capital that you have, you need to make sure that you do this properly. And when you do business, you need to make sure that you know what are the risks that is involved in this particular business. Any kind of business, you need a capital, and you need to weigh the risk that is involved in any particular business that you go into. So when we do Forex business, you need to make sure that you have the amount of research that you go into this business. You learn as much as you can, and the most important thing during this process as a beginner is to find somebody who has more experience and knowledge than you. So when I talk about this, then obviously when you are here, somebody has invited you to our webinar. So those people might have a better understanding of what is Forex, and they can pretty much guide you. So don't do Forex alone in the very beginning. And once you have a proper knowledge, you have the right technique, and you have a proper money management plan for your business, and that's when you can pretty much do this on your own. But however, during this beginning, it's really important that you stick with those people who are doing this. One is it's a shortcut for you to make it a lot easier for you to do this business, and also it's sometimes it can be a morale booster, because it takes a lot of time and effort to learn a lot of stuff, but those people might be able to help you to get the right answers at some point. So before I move on to the next, I really want you to understand that Forex is not a hobby, and you really need to tell yourself that you're engaging on a business. So this is a business that if you really do properly, it can actually you can actually make money and live off it. Okay, because there are traders who are full-time traders that lives off from their profits from Forex trading. And for tonight's support and resistance class, actually I'm using one of my colleagues' notes on support and resistance. He is Raden from Malaysia. He has about 11 years experience in Forex trading and has been a full-time trader for about 8 years now. So I'm grateful that he's sharing his notes on tonight. So I'm just passing on the information on support and resistance. Okay, so based on some of this from his experience, it's really important that we come up with our own what are the techniques that we want to use and a proper money management plan. So there's a lot of things to to absorb at the very beginning, but it's really important that you surround yourself with people who has been in the business, and you surround yourself with positive environment. So it will be a lot better for you to engage yourself on this business. Okay, so at this point, for those beginners, if you have any questions, just put some stuff on the chat box, and my admin can guide you, or I can pretty much answer you straight. Okay, so next, we're supposed to do a quick familiarity on the MetaTrader. So perhaps for those beginners, you can pretty much go to our my YouTube channel, and there is the webinar recording from last week. I can put the, let me just see if I can find it. Okay, so on YouTube, you just search for Blackout Effects. So if you see this dude around, then that's it. So there's actually the last webinar from last week, so you can pretty much watch what we did last week. So there's few things that we did. We also did the MetaTrader familiarization, and also the candlesticks formation. So I think for tonight we can skip that part, and we can go through straight to the support and resistance class. So later on, we have more time on other things. I mean, if you have any more questions on support and resistance, okay? All right. So let's move on with support and resistance. Okay, give me a second here. Okay, so support and resistance is one of the techniques in technical analysis. So there are three types of analysis in Forex. Analysis, what I mean by analysis is how people identify the market, where it's going and stuff like that. So it's an analysis of a particular pattern whereby you can predict where the market is heading next. So support and resistance is probably one of the oldest and the earliest techniques that has been around Forex for a while. So in technical analysis, support and resistance is the concept that the market movement will tend to stop and reverse at a certain predetermined price level. So basically what we're looking at here is we're looking at the history of a particular market, whereby we can pretty much identify where the market has changed direction, what we call here as a reversal. So those are the levels that we pretty much look for, and when we are able to do this, then we can pretty much predetermine where the market is going to head next. Okay. So these levels are identified through multiple touches of price without a breakthrough of that level. So I will explain this later on when we talk about candle breaks and candle rejects and stuff like that. So if you have any questions through the webinar, you can just drop questions at the chat box. So I'll deal with that accordingly. Okay, so the first thing that we're going to learn today when it comes to support and resistance is trend lines. Okay, so a trend line is a line drawn over a pivot highs or under pivot lows to show the prevailing direction of price. Okay, the trend lines are a visual representation of support and resistance in any time frame. So for those who are fairly new, just relax. You can. I know there's a lot of things to absorb, but just you can look at this video again after the webinar. I will be uploading it, so even though you are not familiar with a lot of terms in Forex, you can pretty much go through it again. The more you watch it over and over again, the more you will understand eventually. Okay, so yeah, as long as you put in effort to it. Okay, so there are two types of trend line. The first type of trend line is the uptrend and downtrend. I will show it later on. And the second type of trend line is channel. Okay, so when we look at the market, usually most of the people are using candlesticks. All right, so when we do trend lines and SNR markings, we based on Rudin, he uses line chart as the best method to identify this pivot points. Okay, so this is a line chart and these are candlesticks. Let me just share video over here. Okay, so can you guys see the MetaTrader platform? Okay, I'm just gonna flip through between the MetaTrader and the notes that we're looking into, right? So let's just go back, all right, a little bit. All right. Okay, so let's open the MetaTrader over here. So on the MetaTrader, again, we'll talk about there are three types of charts. So basically, what you have here on top over here. So usually we use the candlesticks chart, as you can see. So the green candles are the buy candles, the bull candles, and the gray blackish colors are the sell candles over here. So there are also bar charts represented over here, and this is the line chart that we are using for SNR and trend lines. Okay, so let's go through this example over here. All right, so as I said earlier on, there are two types of trend line. The first trend line is the uptrend. Let me just write it down. Okay, so the first type of trend line is the uptrend and downtrend. All right, so how do we draw this? Is we use this tool over here. Exactly it's showing draw trend line. Okay, so what we do is we change our charts to line charts, so we can pretty much see the. Okay, we just connect some of the parts over here. So we'll just use some of the most recent data available for us. Okay. Okay, so that's pretty much looks much better over here. So over there, this is the trend line that we have drawn. Okay, so it pretty much tells us that the market is on an uptrend market. All right, so what it tells us in this particular information, that when the price or the market has reached the trend line, then it is the point at which the market will reverse and go back up again. And again, after few days, he has returned back to this point, and again the market goes up. So this is a nice representation of an uptrend market. Okay, so the second type of trend lines is what we call the channel trend line. All right, so the channel trend line is more or less the same as the initial one. However, we actually draw two particular lines. So basically what it tells us over here that there are two places at which the market has reversed. So basically when the market went up over here, it reaches a point whereby it reversed back to the trend line. Okay, so this is what we call a channel trend line. Alright, so just to make it much more better. Alright, so that is the two different type of trend lines, uptrend and downtrend, and also the channel trend line. Okay. So over here on this particular example, we can see that the market is playing between the channel. So basically when it reaches the top of the channel, it goes back down, and when it reaches the low point of the channel, it goes back up. And over here, as you can see, this is what we call a breakout. So what the breakout means that there is a particular candle that managed to break through the trend line. Okay, when it manages to break through a trend line, it tells you that the pattern has changed and there would be a change in direction. Okay, so for example over here, because there's a breakout on the top of the channel, so basically what it tells us that after this the market is gonna go up on this particular market, because now it managed to break through this particular channel. And the only reason why the market went down over here is to put a test back to this particular channel, and this is usually a point of entry for buy. Okay, so when it comes to trend lines, is everyone okay, or do you want me to repeat some of that? Alright, let's move on. So now is identifying and plotting. So usually the best time frame for us to use for trend lines is pretty much on the daily time frame, because weekly and monthly is is really a huge time frame. So based on Rudden's teachings, he utilizes daily charts for intraday trading, and later on we pretty much narrow down to H4 and so on. Okay, so let's look into the line chart, and we pretty much plot the support and resistance. Okay, so over this example over here, you can pretty much identify some of the peaks and the valleys that the market has formed. So you change your charts to a line chart, and you identify the peaks at where the market has reversed. So these are what we call the point of resistance. Okay, and where the market has reversed and go up, and this is what we call the areas of support. Okay, so based on this, then we change it back to candlesticks chart. Then we can pretty much see the candle and what has happened on that particular level. Okay, so based on this example, we pretty much draw the line that, you know, the highest point at which there's a resistance level, and we also drew lines on the support levels as well. And over here, as you can see, based on the line chart earlier on, we couldn't really see what was happening there, but you know, the market has actually tested the previous resistance earlier on. Okay. Okay, so let's go through the charts again. Okay, so let's look for another chart. So you open a chart, look on USD CHF. So let's go to daily. Okay, so let's just zoom out a little bit, and we use the line chart. So for you guys who are not familiar with the time frames, basically we have the time frame panel over here. So this is monthly, weekly, daily, H4, H1, 4 hour, 1 hour, 30 minutes, 15, 5 minutes and 1 minute. Okay, so what it tells us over here that each particular candle on each of this time frame is 24 hours. So there's a daily candle over here. And when you look at the chart of H4, so each particular candle is being formed over the period of 4 hours. So that's really important. You guys can look it up on the previous webinars when I talked about candlesticks formation. Alright, so let's go to daily and we change it to the line chart. Alright, so the most important thing on this time frame is we just go through the candles that that is more recent to the last week's candles. Okay, so we can use this horizontal line to draw the resistance area. Okay, and we can use the lowest point at which the market has reversed as well. Okay. So the most important thing when it comes to support and resistance is what Raden always said, that we must always look to the left. So because technical analysis is based on things that has happened before, so it's a study of a particular pattern of the market. So when we understand this particular pattern, then we know where the market is heading. So basically what it tells us on this particular area over here, okay, oh, that's too dark. Okay, you understand. Okay, I'm just looking at this particular area that this is the highest point where the market has reversed and went back down, and this is the point at which the market go up. So this is now the highest and the lowest point of the daily time frame. So when we understand this, then we can pretty much understand there's a particular breakout that has happened over here. Okay, so this is how we draw the resistance and the support levels. Okay, so now we go through the most important thing when it comes to any particular technique that you're using, regardless it's Fibonacci, regardless it's support and resistance or any other technical analysis. The most important thing is to understand between candle break and candle reject. Okay, at the resistance level, a candlestick that open and close below signals a rejection to the level, and vice versa. So if a candlestick open and close above a signal, and that is what we call a candle break. So in this particular example, I highlighted 5 areas at which there is a rejection. So basically what we have here is a resistance level whereby the market has not managed to go through. Meaning the market couldn't break through this particular zone. So over here, this is a candle rejection. Also a candle rejection using what we call the candle shadow or wicks. So basically the market went back here, couldn't manage to break through. Again, the market plays around, and after a while it managed to go back to this area, and again it couldn't manage to break, and it went back down again. Tested one more time, and finally there's a few breaks over here. So this is now a clean information that tells us that the market has managed to break through this particular resistance. Okay, so when this happens, we know that the market is going to go up. Okay, so it's vice versa as well. So if this is a support level, then the market's going to go down. All right, so based on that information, we know that this particular level is the zone of resistance. And finally, there's a candle that managed to break through this particular zone, and this is what we call the breakout. So how do we trade this information is when there's a breakout, we just let the market move first, and we'll wait until the market goes back to this zone again for the retest. So basically what happens here is what we call the support and resistance flip. This is what we call the Snr flip. So basically the resistance, it was a resistance beforehand, and after the breakout, when the market goes back here, there is a change of roles now. So after there's a breakout, the resistance now becomes the new support for the market to go back up again. So this is very important to understand. All right, so let's go back here. So based on USD CHF, as you can see on this example, let me just zoom out a little bit. So what we have here is the resistance level of the market on this particular area, and this is the support area at which what happened. Okay, so over here, as you can see, let me just show it here. The market was going down at this particular area, and then the market tries to break through this particular resistance. Okay, let me just, okay, I think I pretty much need to change the color. Okay, so the market tried to break this resistance. Okay, and the market went down. It tried it again. It couldn't manage to break through, and the market went down again. After after a few days, the market managed to break this particular area. So this is now what we call the breakout zone. Okay, so that is now the breakout zone. And this breakout zone, after the breakout, as what we have looked earlier on, this is now what we call the Snr Flip. Okay, let me just change that color just to make it more presentable for you guys. So this is now the Snr Flip. So basically what happened here, this was a point of resistance whereby the market couldn't manage to break through to go up, and it went down, and finally there's a breakout. So after that breakout, the market retested back to this particular zone. So this is actually a point of entry for buy for this particular market. But if you miss that entry, then you can just pretty much mark it and wait until there's another retest on that particular zone. So basically, if you manage to get this, then you're pretty much lucky. But after a few days, then you just realize that there's a Snr Flip over here. So this is a good place for you to wait for that trade. So this is pretty much the Snr Flip that we're looking at. So beforehand, this is a resistance, and now it has become a support. So let me just okay. So this is now what we call the breakout over here. Okay, so this candle managed to break through with the candle body of this particular zone. So that is what we call the candle breakout. So based on that information, then we can pretty much give ourselves a little bit of based on the information that we have, it tells us that that's what happens on Snr flips. Okay, so we know the previous resistance after the breakout then is pretty much a place whereby we know that the market is going to go back up. Okay, so in this particular example over here, we can see that okay, this is this area is a resistance area. Okay, let me just mark it there. So that's a resistance area, and we can pretty much see over here in this information that this candle has managed to break through this particular resistance. So this is what we call the breakout. Okay, so what happens next is pretty much straightforward. So we know that this zone is our support. Alright. Okay, let me just hang on, give me a second over here. Okay, so this is now our support, and as you can see, after the breakout there is a candle that went down over here. It's actually managed to test this particular area. That's actually a point of entry for buy. Okay, but it's really important that we wait at this point for us to go for buy. So we know, based on the information that we have seen before, once the market has retest back to this area, then that's a point whereby we can pretty much go for buy. And over here again, there's another breakout, then we know that this is an Snr Flip as well. So it's really important for us to understand this information. Okay. Okay, let's go back to the notes. So based on the information that we have just learned, is there anybody with burning questions so far? Okay, let's move on. So we've gone through how to draw trend lines, the two types of trend lines, the uptrend, downtrend, and the channel. We have gone through how to identify resistance and support. So you can pretty much use daily as a time frame for us to do that. And after that, we also understand between candle breaks and candle rejects, and the importance of identifying Snr flips. Okay, so let's move on. So last week we actually talked about two particular setups that we have learned. Okay, there's a question here just on daily. So basically, when you do your SNR markings on daily, we are pretty much looking into intraday trading. But if you want to do markings on weekly and monthly, then you're going for a much longer term in terms of swing trader. So most of us who are just started to learn, it's pretty much a good area to start in the daily to do our analysis in terms of support and resistance. Then we can pretty much narrow it down later on H4. So we'll talk about that now. Okay, so last week, this is just a review of what we have learned last week. So we did Fibonacci last week, and we talked about two particular setups, which is engulfing breaks and dominant breaks. Okay, so we'll do that today as well. So engulfing is a pattern, a chart pattern that consists of a small candlesticks with short shadows and followed by a large candlesticks which eclipse or engulfs the smaller one. So based on this example, we know that this candle has managed to break through the bull candle before that. So this is what we call the bearish engulfing. Bearish engulfing is a sell setup whereby we wait for the market to retest that particular zones. Okay, so basically where the candles has managed to break through. Let's say this is the bull candle and this is the sell candle. This is the particular area whereby what we call the initial break. So basically from the initial break to the highest point of the bull candle that has been engulfed, that is the zone at which where we can enter for sell. So at this particular example, we know that this is the initial break retest. So this is actually a good point for entry for sell. Okay. So over here at the bottom, we also have the reversal pattern in terms of buy setup. We have bullish engulfing. So this candle managed to break through this sell candle over here. So this is now what we call a bullish engulfing, and the initial break is at the highest point of this sell candle. Okay, a revision on dominant breaks. Dominant candle is the candle in the pattern which has the longer body, a bigger candle, and defines, you know, the trend at which the market is going. And basically, what happens here, as per the engulfing class last week, engulfings are the pattern that whereby the candles manage to break 1 versus 1 or 1 versus 2. Okay. For dominant break is pretty much straightforward as long as it is 1 versus 3 or more. Okay, so for this example, this is a dominant candle on this particular group of candles. So we are waiting at where the market is gonna break. Okay, so if it breaks this level over here, so we know the market is going down. If it breaks over here, then we know this is a reversal pattern for buy, because it managed to break through this dominant candle. Okay, so let's say for this example, this is what we call a dominant break, because it managed to break through this dominant candle, or some people call the mother candle. So this is now the buy zone at which for a dominant break. So we wait until the market goes back in, and if this retest, the candle managed to break through this zone, that's where we have to take the decision for us to cut loss. But if it doesn't break this particular zone, then we know that it's still valid for a buy. Okay, so as you can see in this example. Alright, so we also learned another particular setup that's been used by Rudden, is the Snr Flip, whereby the price movement through identified levels of support or resistance, which usually followed by heavy volume and increased volatility. So usually the traders will buy underlying assets when the price breaks above the resistance, or when it breaks the support for them to sell. So based on the examples that we went through earlier on, we pretty much understand the Snr Flip in terms of, for this example again, this is support level, and there's a breakout. Then there is a change of characteristics over here. We know that this is a clear breakout, and we know the market is going down after that. So this retest on the particular zone, those are the point of entry for sell in this particular market. All right. So just a quick go through on the engulfing patterns, how we predetermine where the market is going. So basically, what we have here is a bearish engulfing with 1 versus 1. So this is the initial break where the market's gone through, and we know that this is a resistance level, and this is now the support level. So how we pull the Fibonacci, I think you guys can go through the webinar we did last week, and you can pretty much get the settings from there. Okay, so based on the engulfing patterns, we can pull the Fibonacci, and we can pretty much predetermine where the market is heading, so we can set where we are going to put our take profit, and where we're going to put our stop loss. So we'll talk about these things on a few examples. Dominant candles, this is how you fold the Fibonacci's as well. So this is an example. Please go through the last week's webinar for you to understand this. Okay, so let's go back to this. So before that, we'll about 10 minutes break, and we'll talk about some of the setups that is available for us for next week. So we'll do a quick analysis on the market, so we can do a follow-up live trade perhaps on Tuesday. So for those who are here today, I think I will do a live trade on what we have done analysis today. So we'll do analysis today, and hopefully Monday and Tuesday when the market retrace then that's the best time for us to do a live trade instead. So let's go for a 10 minutes break, and I'll see you afterwards. Okay, shall we start? Everybody ready? Okay, just give me about 2 minutes here just to set up something. All right, guys. So we only have a few more minutes for the webinar. Okay, so what we're gonna do is we're just gonna go through a little bit of analysis for next week, and hopefully on Tuesday we'll do a live trade session with you guys. Hopefully, if the market does what we intended to do, then we'll do that. But if there is other opportunities, then we'll take that as well. All right. So what I have here is AUD USD. As you can see, we'll do the Snr markings as we have just learned. So basically, this is a daily chart pattern. So we'll mark the resistance points on, and also the support levels that we have on the highest point and the lowest point. So what we do with this information is for us to identify some of the setups that is available for us on this particular area. Okay, so how we do that is basically we look for setups in the lower time frame to narrow down the point of entry. Okay, so when we go through H4, okay, so this is the marked zone earlier on. So basically what we have here is a setup. So okay, just zoom it out a little bit so I can find it. So over here, what we have on the resistance level is this dominant or an engulfing setup available here? So based on a dominant setup, we have 1 versus 3 candles that managed to break through this particular buy candle over here. So this is what we call a dominant setup, sell setup. So this is now the setup that is available for us on H4. Okay, so we know that can pretty much pull the Fibonacci from the lowest body to the highest wick. So that is the dominant setup available for us on the H4 time frame. Okay, so we know that the market has already reached TP3 and actually managed to break through the full cycle of that. Okay, so over here at the bottom, let's look of what we have here. So basically on the bottom as well, we have another setup. Oh, okay, go back here. So this particular setup is an engulfing setup whereby we have 1 versus 1 on this particular area. So we have an engulfing pattern on this particular setup. So for the purpose of our analysis, we're just going to go through on H4. So earlier on, we have identified pretty much on the channel, the trend lines that has happened. So basically the market is an uptrend market over here, and finally there's a particular breakout over here. So over that breakout, this is now a particular change of role whereby this is the area of support, and once there's a breakout, then we know this is the particular area at which the market will retest and go back down. Okay, so this is a really good information that we have over here. And on this particular group of candles that we do have a sell setup available for us. We have a buy candle that is engulfed by 1 versus 2 candles over here. So this is now what we call bullish engulfing. All right, sorry, bearish engulfing. Okay. All right. So based on this engulfing pattern, we know that this is now from the lowest point of this candle to the highest point. This is the zone at which where we can entry for sell. Okay, so this is now what we call a sell zone for the that's so big. Okay, so this is now the sell zone. For you as a trader, it's really important for you to identify the sell zone, and you need to make sure that you know how many pips is available for that zone. So go to the lowest point to the highest point. So that's about 15 pips. Okay, so there is about 15 pips on this sell zone. So let's just say, for example, that you have $100 USD in your account. Based on your money management plan, you are only able to do 0.01 entry lots for a standard account. So basically, you know, there's about 15 pips on the sell zone. So what you need to do is you can pretty much go for every 5 pips of that. So let's go for 5 pips. So that's your sell zone over there. Then another 5 pips. Then from there. So you can pretty much do selling areas for those particular areas. So you can pretty much put sell limits to those particular zones. So this is your money management plan. So if you have done that, then basically when the market retests this zone, so basically you managed to retest on 2 of your particular sells, so you would have profited on 2 times of that lot size that you have. Okay, so that's how you pretty much do your money management. So Radin has told me earlier on that usually on this particular zone you add another 10 pips. So this is your actually the point at which what we call your cut loss area. So this is where you put your cut loss. So if the market managed to break through, then you'll cut your losses over there. So that's how he does his trades as well. Okay, so this is really important. So let's we already talked about that. Let me just delete this information over here. So over here, if you haven't managed to take this trade instead, then there's a potential that there's a market over here. Okay, so basically on H4 there is still an area for us to make an entry as well. So if we narrow down to H1, let me just delete all this stuff again. So in H1 we have as we have over here, we have a dominant setup over here as well. So that's a zone for the area as well for the entry. And over here at the bottom we have a dominant buy. Okay, so we will look at it. Okay, that's the candle body. So this is what we call the dominant candle area. So this is a dominant buy setup. So we know the market will try to go up. Okay. However, the higher time frame has already told us that the market is going down. So most probably the information that we have here is the market is going to go up for us to for another point of sell. Okay, so that's really important. So based on this information, we do have an SNR flip at this juncture, right? So if we look at the SNR on this particular time frame, we pretty much understand that this is the lowest point at which the market has gone through. Okay, so basically the market retested this area before. Okay, as you can see over here, the market resisted, and then finally there's a breakout at this particular area, and afterwards now there's a breakout. Then we know this particular zone is zone for sell on the lower time frame. So pretty much the information that we can take in here is basically the market's gonna go back up to retrace at this particular zone, or most probably on a much higher zone. So what we need to do over here is, based on this information, I would take it as the trend line retest again over here sometime next week. So when the market does retrace on this particular level area, and that's where I would pretty much go for that sell. And over here, okay, there's another zone of resistance over there. So this is where we will wait next week, hopefully on Tuesday. That is where I would wait for that particular retest again. So I hope next week you guys can rejoin again on the webinar. So let's see what is the outcome from this trade. So for now, as promised, we'll go through before we go through the lucky draw, I will talk a little bit about some of the services that our group, Smart Trading Group, can offer to you guys. For those who are just fairly new or still struggling with your trading, we do have services or facilities that can provide you with a platform for you to trade while you're actually learning. So basically, what I'm talking about is the copy trade that we have set up in the broker that you actually registered on. So basically, when you registered on Tifia, you can pretty much go to social trading platform. So just look for Smart Trading, or you can ask the person who brought you to the webinar, so they can pretty much set it up for you guys. So we do have 2 copy trades that has been running for a while now. So over here, you just type Smart Trading, so you can pretty much see our copy trade. We do have 2 trades running now, and we are just about to start another one for the Hari Raya events for the guys here in Brunei, Indonesia, and Malaysia. So over here at the top, you can pretty much see when you click on this accounts, you can pretty much see the description. So the medium risk and the requirements that is required. So basically, how the copy trade works is, so basically how the copy trades work is you open an account, you deposit on your account, and you just click this copy over here. So what it does, it actually asks you to create an account, and you deposit the minimum requirement for us. So let's say the minimum is $100, so you put $100 there, and you just follow the requirement from us. Let's say copy in proportion of the equity and the requirement, and then you just put you read the agreements and make it to investor account. So what the copy trade does for you is, basically, if you're just learning or you're still struggling on your trades, or you do have some bit of money that you are willing to invest on Forex, but you don't have the time to do that. So this is a good platform for you to join. So what you can do is, what the copy trade does is, when our accounts, there's two guys who's running the copy trades for us. It's Raden, which is me, the Raden and also me. So I run the medium risk copy trade, and Raden runs the low risk. So as for now, there are two that has been running. So basically on the top, the CLS, that's the medium risk run by myself. And we have about 278 investors with total equity of 31,000. So the equity right now is about $77 because we're still floating on negative on a particular trade. So we're still waiting on that outcome. Same here as well. So over here, this is the low risk copy trade. So we have about 114 investors with total amount of about 11,000. So basically the equity is decreased because of the current trade that's running. So pretty much that's how the copy trade works. So basically what happens is, when we do our entries, your accounts that has followed our copy trade, it will automatically follow. And the most important thing, when you do have profits, the most important thing to understand with this one is based on this one. So the reason why we have this is, we do have the trader's commission. So we have about 20% of the profits of your profits. So it is done automatically. The system, TFIA system, copy trade system, will do this the deduction automatically. So there's no hassle at all between the trader and the investor. So everything is done automatically. So let's say, for example, you do the copy trade, and the copy trade managed to get about $10 profit. So that $10 profit, based on the 20%, then that $2 will be going to our accounts as our commission running the copy trade. So that's really important for you guys to understand. So it will be done automatically after the trades has been closed. So I think for most of you that has been following us for a while, so this is a good platform for you to build your capital as well, and also build your confidence. And you can pretty much see our entries as well, so you can also learn from all of those entries and gain experience through the copy trade system. So it's a really good platform for you guys. So without further ado, let's go to the one that you guys have been waiting for. So we'll do the lucky draw tonight. Okay, we'll do the lucky draw tonight. So I'll just write down who are the winners over here. Okay, so let me just go through the pile. Okay. Okay. So the first one is Hafizan Wai. Account number 6089570, under the name of Hafizan Wai. Alright. So congratulations to you. I forgot, I don't know which country is it. So admin, can you please find out which country is it from? Okay. Okay. So I think number 2. Let's go through the number 2. Farsel Jalil. Okay, Farsel Jalil, with the account number 6089612. Farsel Jalil. Okay, congratulations to you. Okay, I think Hafizan Wai, is this Mr. Thanos? Okay, Nice. Okay. On the third winner, we have Muhammad Amir bin Abdullah 6090658. Muhammad Amir. Okay. Alright, that's the third winner. I think this is from Malaysia. Okay. Hafizan Wai, I think also from Malaysia or Brunei? Okay. So Brunei. So I'm not sure with Faisal Jalil. We'll look it up later on. Okay, the fourth winner. Okay, let me just run to the file. Okay, let's run through again. Okay, the fourth winner we have Kalin Andres with the number of 6079088. Kalin Andres, nice name. I'm not sure where this person is from. Okay. Guys, can you check where this person is from? Okay. Is he from Brunei, Faisal Jalil? Okay, that's good. Okay. Faisal Jalil, Brunei. What about Kalin Andres? Can you guys find out where is he from? Okay. Our third winner. Oh, sorry, our fifth winner with the account number of, let me just edit this one, 6089581. Okay, let me just get that edited. 6089581 with the name of Marco Dominic Reyes. I think this dude is from the Philippines, maybe. Okay. Alright, so just double check that in the system. Let's see if that's the correct person. So congratulations to these winners. This one, Kalin Andres is for Philippines also. Okay, well done, my friend. So Philippines as well. So good job, Filipino. All right. So congratulations for the 5 winners this weekend. So on the next, we will see again on Tuesday for the live trade, and also another webinar on next Sunday. So next Sunday we'll also have another lucky draw as well for 5 lucky winners. So your accounts will be credited within the next 30 minutes. So congratulations everybody. Have a good evening. Assalamualaikum warahmatullahi wabarakatuh.